If you've got a premium bond, then you're going to want to listen to today's video because premium bonds are actually in the news right now. This is the article. It said Rachel Reeves is urged to raise the 50K premium bond limit to tackle debt. Now, as you'll see when we go through the article, there is no real discussion or indication of what they would increase the 50K limit to. There is a lot of talk, though, about a cut to the interest rate, which effectively funds the prize draws that you get with premium bonds. And that comes with some repercussions, I would say. And that's what I want to kind of cover in this video. We're going to do a bit of a scribe because if you're using premium bonds and they do this, they cut the rates, then you have to really question why you're using premium bonds in the first place, besides it just being maybe a safe place to put money. But let's just jump into the article here and see what they have to say. So it says here, Rachel Reeves is facing calls to remove the 50K cap on premium bonds to tackle Britain's growing debt, cutting the rates offered on the nation's favorite savings product, which holds more than 130 billion to 70% of the bank rate, would raise around £1 billion for the Treasury. I'll explain how that works in a moment. The current premium bond rate of 3.6% would therefore be cut to 2.8% under the proposals, as the current bank rate is 4%. Now, it's saying here that an economist from the London School of Economics told The Telegraph, "We know historically that people don't cash them in if the rate is roughly 70% of the bank rate. You would still have a lot of money come in. It would save taxpayers £1 billion. There really is no reason to give 1 billion more than we need to." So I guess this is really the conversation piece, right? Because I know a lot of people who use premium bonds for as a safe haven. And whilst you don't get a interest rate or like growth on the balance in your premium bonds, there's a couple of things that it does do. It gives you a prize draw. Two people at least win £1 million every single month, apparently, with premium bonds, but it's also tax free. So it's an additional account that you can use where you can keep, well, your winnings, if you win any, completely tax free away from the government. And it's pretty safe because obviously it's government run as well. However, there is an important conversation to have around this, which I want to use the scribe for in today's video, because when you're using premium bonds, you can't get away from this idea of inflation. So currently, the inflation rate, what is the inflation rate right now? I need to double check this. I should have done this before I actually started this video. Inflation rate UK. Let's see what it is currently. So the inflation rate right now is, if I'm not mistaken, it is 4%. Is the current inflation rate. Now, according to the article, what they're suggesting to do is cutting the current premium bond rate from 3.6% down to 2.8%. Okay, so this is the new proposed rate that would fund the prize draws that you get in premium bonds. Now, there is an issue with this because if you understand how inflation works, inflation is essentially an erosion of your purchasing power. It means that if you are making any less than the prevailing rate of inflation, you are essentially losing value in your money, i.e., your money can't purchase the same things because the price of things around you have gone up at a greater rate. So, crucially, and this is the reason why we invest, right? If inflation is at 4%, but you have your money invested achieving 7%, then clearly you have a 3% margin, which means that your money has actually grown. So not only have you kept up with inflation, but your money has also grown. And here's the problem with premium bonds as they currently are, which would make it even worse if they were to do this and cut the rate being offered to fund the premium bond prize draws, right? So at the minute, inflation at 4%. Okay. Now, if you're getting 2.8%, then clearly you are 1.2% already behind the inflation rate, which means that if you're using, if you've got £50,000 in NS&I premium bonds sat in an account, you've really got to start questioning whether it's the right place to go. Yes, it's tax free, but you're not keeping up with the rate of inflation, which means that you're actually eroding your money. This money is actually losing value at a pretty decent pace. And if you're sat with premium bonds with money in it for 2, 3, 4, 5 years, you've lost a lot of money essentially. And so this is going to be a real concern for people who are using premium bonds right now. Now, does that mean that they don't have a place? No, they definitely do have a place, but I think this is going to be something that if you're using premium bonds, you definitely need to be aware of, because you then have to weigh up what are your options. What other accounts do you go for? There are savings accounts on the high street right now that will still get you in the 3 to 4% range, albeit you've got to pay tax on the interest that you receive, but at least you've still got your savings, your personal savings allowance. So if you're a basic rate taxpayer, you can get £1,000 in interest before you start to pay tax. If you're a high rate taxpayer, that amount is £500 for the year, right? So at least you've got that to offset it. And if you're able to get, above 4%, at least you're keeping pace with inflation, albeit at a smaller rate. So things like fixed rate interest accounts will probably be a little bit more attractive than premium bonds if they do this. Any account that is over 4% is going to be more attractive. The only time where I can see that premium bonds will become attractive is if we're able to get our inflation rate down from 4% to, say, the target 2%, which has been the mission for quite some time now. And if you believe any of the news that we're seeing currently, our inflation problem is only about to get worse. Now, one of the reasons why they're looking to do this, and I will just point this out in this article here, and let's just go back here, is that we're seeing a trend at the moment where the cost of government borrowing has risen by 30% between August 2024 and August of this year. So in the last calendar year, we've seen government spending rise by 30%. It's saying here in the same month, the government spending exceeded revenues by £18 billion, the highest for August since 2020. And that's including 8.4 billion on interest payments. I mean, just that right there, does that not make your eyes absolutely water? The fact that we're paying 8.4 billion quid in just interest payments. Now it says here that the proposal to cut the rates from 3.6 to 2.8 would mean that the government could borrow money from savers at a much cheaper rate than what they're able to get it at the moment if they went onto the market to be able to do so. And so it makes a lot of sense a from a lending fiscal point of view to do this, because as the article said, they don't necessarily have to give £1 billion away in prize money under the premium bonds mandate and how the account works by simply just reducing the rate. So it's going to be a really interesting call. I will link this article down below here so that you can actually go and read this on your own. There's quite a bit of detail here, but like I said, they didn't really say anything about how they might go about um, increasing the premium bond range. There's nothing in the article about that at all. They just talked about, cutting the rate, which I can see. I can see a narrative and a reason for, given where we are. But what I would love to know is this: if you're using premium bonds right now, how do you feel about that? Will you still continue to use it? I think the job is to find an alternative that will work for you. Ultimately, there are some out there. It's just a case of moving the money across. And I think people feel comfort that premium bonds they're pretty safe. They're not with a traditional bank, for example. So they're with the government, which might be a little ironic to say, considering that there's seems to be a lot less trust in the government these days. Let me know what you think in the comment section down below. And if you did get value from this, please don't forget to tap that like button. Just give us a nod to the YouTube algorithm that you enjoyed it, and it will be recommended to other people. And if you've not already subscribed, consider subscribing. I'm trying to get the channel to 80,000 subs by the end of the year. It's a big, big goal. That means 14,000 to go. So subscribing will definitely help me. See you later on. Probably see you tomorrow. If not, next week. Have a good one, whatever you're doing. Cheers.